So good afternoon, traders. We're starting a little early today, but we are not going to start a class. We'll just start with some questions. So let me see what questions you guys have. Okay, quick question. On trends and fibs, when the trend line is broken, that structure above it becomes one piece. So when the fib is drawn, okay, I remember that question. I got it. Let me just pull it up and I'll show you. So good. So good question. By the way, this is how you would look at it, right? This trend you have here is only for this move up. This is one, that is 1, 2, 3. This would have been the trend, right? But this trend is not valid because if you pull this trend up, this correction here is not equal to these, right? So what we're saying is that this impulse is 1. You have a bigger correction here. This is a bigger correction. You can fib this, you can fib this, you can fib this. You're still in the uptrend, right? So if you're looking at the breaking of this trend here, right? Remember what the rule says. If you break the trend and you don't continue, which means you don't get a consolidation here in a down, you just go back into it, you start looking for patterns. So the correct trend line, if you're using that rule, the correct trend line would be this. But if you're also using that rule, it says you have to have a pattern at the top, right? So this would have to come here, and come there, and come back here. And then you would fib these pieces here, see? And you'd be looking for that move there. But once you break out of that, which means you're no longer looking at a possible pattern in the making, you relook at the structure to see, well, what was the structure? And in this case, we have decided that this was the corrective structure. That was a running flat. Now, you would not know this as yet because it's too early. So this trend line in that case is absolutely correct. Right, that trend, the second trend line becomes correct, but you see you didn't connect it here, you connected here, right? So that means your fib goes from here to this top. That's your impulse. The impulse is here, but we will always use the swing high, swing low, which means this is an expanding or running flat, you would still use the top. So this would be the fib. You would look for this target, and this target could, you know, come and go more. And then we will see what that pattern is making. We're in a Y wave there, right? So you would know that later on. You would take this fib out from here and you'd move it to this level. So this would have its own fib. That is for the bigger correction. And this would be for this one within this structure, right? So if this turns from here and come down, I don't think it will. They may make more. But if it does turn from there and come back, then we break out of the entire structure, not making a bigger one like this one, then we fib forward. Okay? So good question, by the way. It shows that you're paying attention, you're doing so. Just this piece you don't know it just in terms of the pattern, and you wouldn't know this pattern as well. So when we finish patterns, that will fall in place completely. Let's go. What is the next question? Hope that helped you, right? One of this case should happen to confirm breakout of trend and consider everything above trend line as one piece. Price breaks, move away from trend line. Yes, move away very far and very fast from the trend line. Correct. Price break, make correction, then drop. Absolutely. That answers the first question that I was just answering. Perfect. Price just make a bigger correction, then continue to go up. Great. Well, in the case of the bigger correction, it will make an impulse, correct, and make another impulse. That will give you the bigger correction. So number 2 answers number 3 immediately. Those are correct. Absolutely correct. In the case of a fib is still valid. Price only breaks trend line. Trend line rule says the price should break the trend line. The price is only used the top of the bottom. Yes, that is correct. The Fibber rule says if the price breaks the top, then Fibber is no longer valid. That would be if you're in a downtrend and Fibber breaks the top. Then so if you're in an uptrend, it breaks the bottom. It's no longer valid. So trend line rule says if the price breaks the trend line, if that becomes one. The rule says the price breaks the top. Let me see what example you're showing that. See? Okay. If you're talking about this one, this is the euro. So you're making assumption this is going to go like that, right? In this case, this would be the fib because we're still within it, right? We're still within this impulse. And we don't know what this is going to do. But if you think this will go like that, well, then the fib will come from this whole piece. But in that case, I'll be using this fib. Why this fib? This becomes the impulse. This becomes the correction, and you're looking for this to go to target when it starts to break out. Does that make sense? You could still use this as retracement. We could still use this as the retracement fib if it breaks out of here. See where it will retrace to. Who says they're not going to come back here? So we'll find a retracement fib somewhere here. And you can use this for this one. That is if you go, the target is going to be the target. Right? So for now, yes, this fib is correct. We're still within that correction. And if you notice, if we take this as the impulse, or we take this as the impulse, this correction was pretty huge. So this correction is pretty small still, right? Still possible it could go more. So I hope that answered your question. Is the about channel removed in Slack? No, it's renamed because I'm tired of telling people not to make chat in there, so I've made it a no chat thing, right? I was trying to make the name a little longer, but it'll limit how much characters you can use and it'll limit what you can use. So I tried my best to put it so that everybody understand. I'll let you know that. I think some people have noticed that already.
Your mic is giving quite some noise.
Okay. Okay, is it okay now?
At the moment it is, yes.
So that is what we've done. I just renamed it. You guys will see it. It's written linked messages, no chat. Right? I think that is very clear now. So let's see. Okay, somebody had answered you already. Let me go down, please. A very small question in MACD. Let me just. Okay, guys, we will stop now. I'll take this last one and then we'll stop. Keep your questions for the end. You will bring them to me. I just was taking some questions before we start. Right? Euro USD. Here is the top of the price. Okay, you're looking at this one. This is the top. We check this. That is divergence. Or we check this. Oh, I see what you're saying. You're asking between this one and this one. We check the top, the whole piece. Actually, with the whole peak, including this piece too. When we do filter today, you will see why. So I think somebody asked that question yesterday also, and I told them probably today they'll get the answer in that. You will take the entire piece, all of this, because if this one was higher, you would have used this peak, not these peaks, right? So in this case, you use the highest, and that is today's topic. So let's start right there. Everybody else who wrote questions I didn't answer, keep the questions for a day. And if you made a chat, you said something, I can't see it because there's a limited amount of how much messages I can see. After that, the messages go away. So if you keep typing, I would not see them. This is the one I stopped at. You can retype everything after the class, right? So let's go. Let me go back to the chart I'm using, which is the pound. And today's topic, I specifically leave those questions on so you guys, when you're going to watch, you can see, you will have some example to look at, and maybe that will answer your questions. So let's go. Today's topic is MACD and how we use the MACD to identify what is a wave. I think that's the most interesting part that all of you are here for, right? You're exactly here for this. How do I isolate and understand what is a wave, and how does that help us in understanding what the structure will be? So if you study Elliott wave a little before, of you've read the book and you've read about 1, 2, 3, 4, 5, ABC 1, 2, 3, 4, 5, you're going to be in for a little shock today if you haven't looked at the webinars before. But if you've looked at them already, now you're going to still try to figure out why we do it this way and how it's worked that way. Remember, I want you to start before I go that, so for you to understand what we do and how we do. The chart moves in waves. That's very clear. Everybody has agreed on that. Whether you read the Dow theory, which says 1, 2, 3, whether you read the Elliott wave theory, which says 1, 2, 3, 4, 5, 1, 2, 3, we all agreed on one thing: it moves in waves. What nobody has ever agreed on so far is what is a wave. Right? Nobody has ever, not the Dow theory, not the Elliott wave theory, has told us what can we consider in the chart to be a single wave. And how do we know in a single wave how many subwaves we have? Right? Is it 5? Is it 7? Was there an extension within it? They tell us that, and what they do, what Elliott wave did, and what most Elliott wavers do, is they make assumptions based on what they see here. So they will label 1, and then they will label 2. They can put the 2 there. They can put the 2 there. They can put the 2 there. That will be all subjective, and it will be based strictly on the person who's labeling, right? Whether he has more. He could put 3 here. He could put 4 here, and he could put 5 here. Literally, he could put them anywhere. And you've all seen that, right? You've seen traders putting the waves count almost anywhere. And most times, because they're doing it hindsight, they will put it to fit what they see. right? If they know that you have to have a 3-5-3 pattern, they will fix a 3-5-3 pattern. If they have to have a 5-3-5-3-5, they will fix a 5-3-5-3-5. I've literally watched, I mean, people on who are considered, not the little guys in TradingView and all over, people who are considered the cream of this thing, who should know the theory very well. I've watched them fix the charts. And I'm like, you know you're fixing that, right? You have to know you're fixing that, because that is not how the chart is, that's not what the chart is doing, right? And you actually fix it though, to make it look like that so that the theory will work. Basically, we're not here for that. I would care less about any theory if it's not working. Our sole purpose is to understand if there's a wave, if the chart moves in waves, how do we capitalize on that? How do we use that to give us an edge in the market? So when you finish this course, you're not Elliott Wave trader, you're not Dow theory trader, you're not even my trader. You're learning to trade waves, and you will fine tune that to fit yourself. What we're going to show you how to master the art of reading the waves. And what we have added to it, as you're going to see today, is amazing, because it gives you a clearer vision and it gives you a set of rules by which you would define a wave. That means you no longer subjectively will decide, okay, do we have an ABC? Do we have a WXYZ? Is it an impulse? Is it a correction? You will it's no longer subjective. It will tell you by the amount of waves in the structure, how you look at the structure, how do you define that structure? What is the possible structure? One warning, most times you will never know what the structure is until it's absolutely completed, right? You will make assumptions like an expanding flat. You will never know that's an expanding flat. You can make assumption it's going to be an expanding flat, but you will never know it until it is completed and broken the bottom of the impulse. So there are patterns where you cannot tell what that corrective structure is. And when we come to do patterns in the third week, which is after next week, when we start to do patterns, you will see what I mean by that, because I will show you the PUNCAD. So don't make assumptions. You know exactly what that pattern is. We do forecasts. We take what we have, which means if they give us one piece and two pieces, if they give us a piece like this, they give us one like that and one like that, and we notice they're coming down, we see something in here that says that we will make assumption that it's going to come to this level and go back up. And if it starts to do that, that will be our trade. That is our edge in the market. We see enough reasons on this piece here to tell us it's going to go down. And we see enough reasons in this whole structure to tell us this is the impulse. I should put green, that is the impulse. These are the corrections. And we are expecting a simple flat, and then it's going to go up. There are a number of reasons why you'll be wrong on that. There are many, many reasons why that will never happen. It will not be a simple flat. Because that pattern could turn into a running flat. Sorry, it could turn into, in this case, not running. It could turn into a contracting flat. It could turn into a contracting triangle. It could turn into a much more complex B wave, right? Which means if you look at it, this B wave might end up being one, comes only halfway here, go back up there, and then come down, making this whole structure a bigger running flat. Or a bigger expanding flat in this case. So there are many reasons why your forecast at the present moment that you're making it might not go exactly as you expect it to go. Don't let that bother you. That is beyond the point. What you're going to do is you're going to continue to make that forecast as it's developed. So if the structure is going to develop and change, you will change the forecast you see. As you get better at it, most of the times you will be very, very accurate at it, because most patterns, they're not very often these patterns just morph into something else. Most time it's pretty clear what you're seeing. And at least you can get the next impulse within any corrections. You can get the next impulse. And in most cases, when you're wrong, you get a break-even trade. So one of the other things you will learn when we come to the end of the course is that you should not be afraid of break-even trades. Right? So how do we identify it? Let's go. Let me take everything out of the chart. One of the things I realized, and most of you have seen the webinar already, the classes, the recording, so you would know. One of the things I recognize is that the MACD does something amazing as it follows the price line, the price. Remember, the MACD follows the price. It's a set of moving averages. So it's telling us, it's taking an average of the price and following it. So because it's a set of moving averages, not one moving average, any one moving average is lagging, right? By the way, let me spend 2 seconds on that because some of you use moving averages. I'll tell you where moving averages are lagging. So if you notice this peak here, see that peak when they made that peak there? Not here, they made the peak there. What happens? When it goes into consolidation, your moving average will still be going down. Because your moving average is taking all of this and all of this and giving you an average, and it's still going down. Your moving average will start to go up at this level here. When this average comes, then it will start to go back up. It will start to go back into the consolidation. And this thing will happen, and your moving average may still be going up. Because it will take this one and a number of periods in here and add them up and divide, and then you will still get the moving average going up. It will not show you that sudden drop because you're using one moving average that are using periods, adding up and then dividing, right? So what it's telling you is that you might never see this if you use a moving average. And we don't use the MACD to see that either. You will not see that using the MACD. That's not the purpose of the MACD. The purpose of the MACD is two things: show you when volume is no longer there, when we're getting divergence in an impulse. Divergence in an impulse, because corrections are useless. This is corrections, we don't care about it. Only the impulse in the corrections, we're going to look for divergence within the impulse in the corrections, not when they're coming here, right? That is what it's going to do, is going to bring it back. So what we have noticed is that you get a sharp move, an impulse, and the MACD will come down. You see the divergence in the impulse there, right? But when the correction starts and it's going to go, you will know that that is a complete, the correction is happening when you get a crossover here. So when we get a crossover here, it means this impulse is completed itself. What if you don't get the crossover? Well, that impulse hasn't completed itself. Look at this pullback. You get a pullback there. Oh, 1 second. What happened to my drawing tool now? Something has to go wrong, right? Everything couldn't go so easy. Okay, my drawing tool is getting weird. Why did I lost it for some reason? And I can't leave the screen because the screen is locked in and it's not releasing it. Oh boy. Give me a second. Okay, I can leave the screen now. Let me see. I'll have to go get it. Give me a second. Good, it's back. Got it, escape. So let's go. What we have noticed is that when you're getting internal pullback, smaller pullback within, you don't get crossovers, like even this one. You don't get crossovers, which means that that piece is still the same impulse, right? That is still the same impulse happening. So when you look at that, what you can say is that when this impulse is finished, to know when that impulse is actually finished, is you will start to see the MACD crossover. And this impulse become one piece of its own. Now, you may say, well, it started here and it goes there. You notice there is a crossover here and there's a crossover here. So this impulse has 1, 2, 3, 4, 5 pieces in it. 1 here, 2, 3, 4, 5 pieces in it. So how do we know that that is one piece? You go to one higher time frame, weekly, right? You come to the weekly and you look at it and you said, where were we? I think if I can find the exact spot where we were, I think we were in this piece here. We were in this piece coming down on this piece I was showing you, right? So this piece, if you look at this whole piece is 1, right? Let's start from there. This whole piece here is 1 piece. You get 1 impulse, you get a correction, you get another impulse, not here, see that one, not that one. That one is internal. You get an entire impulse here, and now you're getting a bigger crossover. See that? So this is what we noticed. And then we said, well, how do we really identify where the waves are? Why don't we count 1, 2, 3, 4, 5? Right? That is not correct. So for you to know which piece is one of its own, you start from the highest time frame. And that's what we're going to do. We're going to start from the highest time frame. And you're going to see here that if you look at this, you have 1, 2, 3. Pretty clear, right? That's easy. So how would we know how much waves is in this or how much waves is in that? Well, first let's fix it. Let's see how we're going to identify where the structure is. You will take this line. This line is just for practice purpose. You'll grab this line, the vertical line, and you will look at the MACD where it crosses over here. The MACD will cross over after the move has started, right? So you will look at the cross of the MACD and you will go backwards to the highest price action. And this is the highest price action, and you'll put it there. That's the top of the move, right? We've got a crossover here, you go backwards. And that tells you that this move here ended at the top there, and this move started here. So where did this move to the downside end? You do the same thing. You take it, you grab it, you come here. We've got a crossover there. See where the crossover is? In here. But you go backwards and you look to the lowest point. That will be here. Come on. The lowest point, that would be on this candle, right? So this is now one wave of its own. That's a wave. This whole piece here. You see the crossover here, but this is the wave. You go backwards to the lowest point on the price action, not the lowest point in the MACD, because the MACD may have divergence. And the lowest point of the price action will not be the lowest point in the MACD, right? That is one wave. So when you continue and you come forward here and you said, okay, we got a crossover here. Let's go to find the highest point, and the highest point is here. So this would make it interesting for you, because at this point you'll want to know what's going on here, right? This here. But come on, this is getting a headache. I'll star it just now so I can have it. Let me just star it. So it will be at the top. That is where you'll put it, the highest point. And that means that this entire piece here, from here to here, was one single corrective wave. Right? That is one single corrective wave. Now, you will say that looks like a lot of movement, and that's true. There are a lot of sub-waves within that wave. Just like there will be sub-waves within this one and sub-waves within this one, there are a lot of sub-waves within that. So how do we know if this wave is over? Is this one wave here coming down to this level? Is it over? Not clear, exactly, it's not over. Not until you cross over would you make the assumption that it's over. Because this could stop and continue to do that, and then go back here and do that, and go back and do, and it will still be one wave. See, it will be one wave. We don't have a crossover, the wave is not completed. But can you know if how much waves is in that waves coming now? So we'll go back now to the weekly. And there is where we come. So you come to the weekly and you look at the weekly here. If you notice, we don't have any crossover here. We don't have any crossover here because this one is pretty sharp. But I think if you go to one lesser than the weekly, you will see it. You will see one, you'll see two, and you'll see three. I'll just let you, let you believe that there is one there. When you go down to the daily or the 4 days or the 5 days, you will see that crossover. We'll come to that just now. So for now, it's one piece, but I can tell you that's subdivided into 3 pieces. But this is interesting. You're going to find the impulses are going to have either 1, 3, or 5. The impulses are going to have 1, 3, or 5 waves within them. You're going to find the corrections are going to have numerous amount of waves in them, right? You're going to have a lot of, what about the divergence on the chart? What divergence has to do with this now? Not very clear. Did I ever say? No. What has divergence got to do with what we're doing right now? Focus on what we're doing right now. I'm dividing the waves and show you how many. I'm showing you how to identify a single wave in the structure. Divergence has nothing to do here. Forget about the divergence. Right? Divergence is a whole different topic. If you're talking about where the peak of the MACD is, I just made that clear. Don't worry with the peak of the MACD. Worry with the peak of the price after the crossover. So there are 2 things only important here now. Crossover and price action. Nothing else. Crossover, backwards, highest price action. Crossover, backwards, lowest price action. Nothing else. Don't focus on anything else. Focus on what we're doing. Don't look at anything because you will distract yourself from what we're doing. Remember, those are the only 2 important things you need. right? As a rule, those are the only two things you need. You need a crossover, you go backwards, lowest or highest price action, depends on what you're looking at, right? So when you come now is to divide the waves, understand how many subwaves you have in it. You will see that you have a lot of subwaves here. See, all degrees of subwaves. Each crossover is a wave, right? But each wave may have subwaves within. And what you will find is when you are in the corrective structure, you will have a lot of subwaves and more subwaves within each other that you can see on the MACD. So what we start to do to figure out how much waves is in this thing? Is it 1, 2, 3, 4, 5, 6, 7, 8, 9? Do we have 9 waves in this here? Or is it less? Right? Remember just now it was 1. On the monthly it was all 1. We know that is one corrective structure, one wave, one corrective wave. But now we have 9 waves in it. So your problem is how do you count 9 waves? And that is where we filter it. That's where the filtering comes. So between 1 week and 1 month, we have to filter. We will filter until we get 3 or 5 waves, right? 5 or 3 waves. So remember, you're going to get 1 out of the 2 of them. So let's go back to 2 weeks. We're going to go with 2 weeks first. So we're going to go up slowly to 2 weeks. And when you come to 2 weeks, you notice you still have 1, 2, 3, 4, 5, 6. When you get experience like we do, you would know, okay, that's 1, 2, 3. But when you don't have the experience, what you're going to do? What is 7? 7? Okay, maybe. So 7 waves. So what you're going to do is you're going to look at this. Wait, this thing cannot have 7 waves. So you'll go to 3 weeks. Let's go to 3 weeks. And when you come to 3 weeks now, you're looking at it and said, okay, we have 1 up. That's 1 up. You get a crossover, you go backwards. That's the highest price. You can see it. Let me use this. You get a crossover, go backwards. That's the highest price. You get a crossover here. You go backwards. If you go backwards, the lowest price is here, right? This is the lowest price. Come on. You get a crossover here, you go backwards, the highest price is here. I'm supposed to have this at the top here, yes. The highest price is here. You get a crossover, you go backwards, the lowest price is here. Just get it. I should have changed the color of this, I just remember. Don't worry, I hope you guys can figure out. We'll change the color just now of all these internal ones. So you have a wave up. Let me use a different color here too. Use green should be okay. Let me use pink so that we don't get mixed up with the hell is wrong with this now, man? Good. You get 1 up, you get 1 down, you get 1 up, you get 1 down, and you get 1 up. Right? So we have 1, 2, 3, 4, 5 waves. Right? Now, is that a 5-wave structure? Right? And you know now that is not a 5-wave structure, right? You actually know it's not a 5. Well, why? Because remember the rules that tells you if you don't break the top, it's not an impulse, it's still in correction. So if you're looking at this structure now, you can clearly say, okay, I can see the impulse here, and I can see the impulse here. That means this 3-wave within here becomes a 3-wave 1, 2, 3-wave structure. And that 3-wave structure will be a contracting flat because it's contracting and it's a flat. We call it the contracting flat. So you can see how you can identify what that structure is from the big mess you just had into a very perfect pattern. In all, that whole thing is a flat. 2 impulse and a contracting flat in the middle makes a flat. See? See how easy it becomes? So you don't confuse yourself. In a very complex pattern like that, you can easily identify what you're looking at. So simple. So now you know that when what you're going to know now, how does that help you? You know now if that is what we're looking at, when this thing starts to give you sign at the top that it is turning, you can make that forecast that it's going to come down. Now, would that be the exact forecast? If this is a flat, that would be perfect forecast. What if it's making a more complex structure than a flat? Well, you don't have to worry with that because it's still going to come down to make an impulse first, even if they're going to make a more complex structure. So you will have a very good wave coming down. But there are a number of other things that will tell you that it's probably total over. When we come to do like the size of the correction, the time of the correction, and so there will be a number of things that will tell you that you'll probably be correct in that. So how did I make the forecast before Brexit that this thing is going to come break this low? Any one of you here haven't seen that forecast? I think all of you did, right? It's on my Facebook page. That was exactly how you do it. You look at the wave counts inside, you look at the structure, and you said, guys, we're completing a flat here. There's a very high probability of this thing going to break the low. See? And no matter what was going to happen, I had no clue what was going to happen. I made a call to the Prime Minister of England at that time, but they didn't answer it. So I said, I'll just go ahead with the forecast. They didn't tell me about Brexit, but I still went ahead with it, right? It worked. Without knowing about Brexit and without knowing about all the intricacies of who's going to say what, it worked. That is amazing. When it worked, that is amazing. You don't need to know all the inside news. Right? No, that was like 1,000 trades coming down there. You'd be surprised how much trades we make coming down there. You not make one trade, but you can make. I would have made one trade if I had $1 billion or a couple $1 million. Then I would have made one trade and kept it. I didn't. I'm not Soros, right? Soros had the access of the money. When Soros tells people he made $1 billion trading, right, on this one, he didn't make it on this one. He made it on this one. I could understand that. And I could have made it doing it this year if I had the access to money that he had, right? So what I've realized is for you to make money, you have to have access to capital. One of the main things you guys will learn about trading. The more capital you have, the more you can make money. And I'm not kidding you. I'm already starting to do that. Starting to get in that line where I can make a lot of money because I'm getting access to capital now. Hopefully I get access to much more capital. Exactly. So now that you know, right, you may not even if you take that trade, you will not live through all the big corrections. But it doesn't matter. You can get more. So we know that this thing could either do two things right now. Right? Here's what we know. This could either drop one more or it might pull back and then go. Either way, we will make a ton of money trading this. If you can master this piece, understand what's happening, you can make a lot of money trading this piece. Whether it goes up or down, it doesn't matter. You just have to be able to read it correctly. And that's what we're teaching you here to do now. So let's look within this piece. Now that we've understand what's happening here, what is happening in here? Is this thing over? Your big question now would be, is this over? Can we say for sure that that is complete? Well, we don't know that. So let's go look at it. We're going to look at the internal structure of it to tell us, is there any reason why we should think that this thing is turned and it's going up? Right? As well as we're going to still divide the structure. We know that they're making a likely ABC, right? Oh, you guys don't know that as yet. It's my fault. I haven't gone that far yet, right? I'll come to that next. So you can see the divergence though, right? You know this thing is ending. So let's go look at the internals of that. We'll break the internals up of that. So we'll go back to the 1 week. Let's go back to 1 week. And when you go to the 1 week, you can see exactly how many waves is in this thing coming down. So if you were counting waves before you joined my class, you would do this. You would do 1, 2, and this is what you would do. First, you would put 3, 4, and you would look for a 5 to end here and go back up. Right? You would go for 1, 2, 3, 4, 5, and then you said this will go back up. That would be your count because the third one cannot be the shortest, so you'll go for the fifth one to be the shortest. And then you will have a big surprise. And then you will change that and you will say, okay, here is it. This is 1, 2, 3, 4, 5 for the third wave. This is your fourth wave and you're going for a fifth wave. So you will go 1, 2, 3, 4, 5. And that is already wrong. That is already wrong. I'm telling you now that that is already incorrect. And I'll show you why it's incorrect. Right? Good question, James. I'll show you why it's incorrect. Good. We need to know that this here is equal to this. Visually, all of you can tell me, hey, no, it's not equal. Exactly, right? You look at it and you can tell right now. I don't care, you know, how bad your eyesight is. If it's as bad as mine, you can still see that this is a much bigger consolidation than the one above there. And that's one of the things that Elliott warned about. I think he must have found that mistake while he was testing, is that they must have the looks of it. And when he says looks of it, he's talking exactly about corrective structure. The impulses should not have the same looks. Because if the third wave is an extended long wave, the fifth wave and the first wave could be extremely short. So we know he's not talking about the looks of the impulse. An impulse are very fast moves, so they don't have any fancy looks in them, right? He's talking about the looks of the corrective structure. I think a lot of Elliott wavers tend to know about it, but they tend to ignore it because it doesn't fit what they're looking at. So we look at it and we said it's not there. But then the MACD also helps you. Can we filter this out? Your question is, if I can filter this out, then this is a bigger one. Right? So let's go see. 1 week, let's go back to 2 weeks and see what happens. Bingo. You've just completed one wave on the 2 weeks. This is all one piece of its own. Is it the complete wave? I don't know, because remember in the monthly, we haven't crossed over as yet. But that wave is one wave. So whatever we're doing here now, two things you know, two things you definitely know. Whatever you're doing there is either the start of an impulse to the upside or a correction for one more downside. Those are two things you absolutely know, right? This is either the start of an impulse to the upside because we have completed the whole structure and we're going up now, or that thing in there is just a correction for one more down. Then we will see divergence, and then we're probably going to turn and go back, right? So which is it? Well, remember the basic things you've learned so far, or the basic things you know about structure. If this is an impulse to the upside, what should follow by that impulse? What should the impulse followed by to know it's going to go up? Exactly. So if you have patience and you know this is what you know. Now you have to have the patience for it to do this, and all of you can make that money. Right? Well, if it is a correction, what it's going to do, it's going to go down. So now that you know those two things, you notice something common in those two things? The next wave has to go where? Down. So what should you be looking for? You're looking for when this thing is finished to give you a sell setup. See how amazing it is? Now that you know those two facts, you only need to do one thing. Let that thing finish what it is doing and give me a sell setup. I'm going to sell the sucker. It's either going to be a big correction to the downside for more up, and that big correction, by all means, is going to give you a couple hundred pips, even if you get a break even on it. And I'm pretty sure you wouldn't get break even. It's going to give you a lot of pips. Or you're in one amazing impulse to the downside before it goes back up. See how trading becomes easy now? You don't have to complicate your lives. You just have to be able to read into the structure correctly with a fixed set of rules and understanding what you're looking at. Pretty clear. That is one, and we are making one. What is this one? We don't know. We don't have enough information to say that is the impulse to the upside or that is a correction for downside. We don't know that. That's the unknown factor right now, but that will tell us, right, what it's doing. Lost you there. You have to tell me where you lost me, James. On which part? How do you know the correction is over like previous impulses? How do you know that the correction is over like previous impulse done? How do I know? I think everybody else figure out that why we think that that impulse to the downside. I think your question is, how do I know that the impulse is finished? Right? That piece coming down is one piece. Was that your question, Naveen? Everybody take a pause. Let me get Naveen's question over because that's important. What is the question? How would we know when this move here is finished to the upside? Everybody hold a second. Let's just get that because that should be important for everybody too. Well, you would do the same thing. We're coming to that. You will do the same thing and you would look into this MACD on a lower time frame. We're coming to that. We're coming to how you're going to know when that is over. Let's work with the pieces that we're working with right now. The piece right now is two things you know. This is either an impulse or a correction, and then we will have a proof of it before you continue to go, right? So let me go to James' question. Hold a second. I think that is also important. I'm not sure where he's lost. 1 second. How do you know? I got that. Okay. Is there a little, okay, somebody else lost me there. We'll come to that, so I'll know where you lost. Is there a little speck of green in front of the crossover? Yes, I think you see that green. That tells us it's crossover. That answer your question? First wave is an impulse. We don't know that as yet. I'll come to that, why you don't know that. Is that all it takes? Yes, a crossover to tell you that one is completed. I just told you, right? You get a crossover, two things. Come on, guys, let's stick to the rules. Let me go back with the rules. There's two things you need to remember. Everybody remember two things. I think you're focusing on too many things. Focus on two things. You need a crossover. You need to go back, put it to the bottom. That's where that is where the impulse ends. So if you're going to ask me where this impulse ends, where this one impulse on the weekly end, let me just go get it. You got a crossover. You go backwards. You find the lowest point and you put it there. So on this time frame, on the weekly, I want you to get this clear. On the weekly, this is one wave. On the monthly, this could be 1, 2, 3 wave, because the monthly does not have a crossover. Does that clear up what you guys were getting wrong there? I think some people were not getting that piece, whether this is a correction or not. On the monthly, this thing, on the bigger cycle, it's not over. But on the small cycle, what it just tells us is that one complete wave there is on the small cycle. Well, weekly, 2 weeks, 3 weeks, 1 week, doesn't matter. We call that weekly. Day is the same thing. You can go 1 day, 2 day, 3 day, 4 day. That's a daily chart. It's on the days, the weekly, the monthly. We go with the standard time frame. So on the weekly, we have one impulse and we are making another move. We don't know what that move is as yet. You don't know that. All you see is a move, right? We will go into that later. We'll tell you what that structure is, but you don't know it as yet. But you know simple things. You know that that move could be an impulse or a correction for more downside. Does that clear up? Okay, let me just go back the questions to make sure I'm getting them, and then we'll see it clears up for everybody. How can it a correction yet it's bigger than the previous corrections? Okay, can I know who is asking the question, because your full name is not there? Your full name is there, but okay, let me just expand it so I can see your full name. Oh, Wako is asking the question. How do you know if it's a correction, if it's bigger than the other correction? Okay, that's a good question. Let me answer that. Go 1 second. Take a second on that. How do we know if this is going to be a correction, if it's bigger than the other correction? So, can everybody please remember what we had in the monthly? We don't have a crossover. Let me go back to the monthly. So that should help you guys. Monthly, no crossover. That means this is not finished. That wave is still one wave going there. Can this thing turn here and come back and do that? And then go over? So that means this one will go down here. It will come back here. It will go back there. It will come back here, and then it will go over. Clear to everybody? Is that part not, let me say, is that part not clear to anybody? Good, that is clear, right? So let's go to the second part. Why do we think this is, it is a bigger correction. It is a correction, but it's a bigger correction these, and that is why the MACD told you, two things tell you that. One is that the size of the correction, that is a bigger correction than these smaller corrections, right? And it is not equal to this one. You can see that it is not equal to that one, because we haven't even had a crossover here as yet. But it is much bigger than those. And how do we know that it's much bigger than those? That is where the 2 weeks MACD comes in. Let me go back to the 2 weeks. The 2 week MACD just told you that this is a much bigger one than these. These were internal. These were internal in that move. Compared to this is the bigger one, because this gives you the crossover. So, can it be a bigger correction in a more bigger structure? Sure. You get a bigger correction there, and you get a continuation to the downside, and you get a bigger correction here, continuation to the downside, a bigger you could keep going. You don't know whether it's going to do that, right? Does that make sense? For those of you who don't have the MACD to change to 2 week streaks, you don't have to subscribe. Here's what you're going to do. Go in the chat room, go in the general chat room later on and ask the guys. They have created a MACD that works for that, right? Don't worry about that. Go ask, they'll give you a MACD that works for that. So those are questions you'll ask in there. Let's go. We have a wonderful group. These guys are going to do anything you want them to do. They will color the MACD for you. They'll give you whatever color you want, and in green, blue, pink, anything you like. Just tell them your color, your options, and they'll give you the MACD as you need it, right? So let me just go to what is important questions. Let's go back to first rule is to look for crossover. Take the highest peak. What is the second rule? No, first rule, look for crossover. Go backwards, not take the highest peak. Go backwards. Second rule, put it on the highest peak of the price action. Whether it's down or up, it doesn't matter. The highest peak of the price action. Downwards or upwards, right? You can put all one rule. It doesn't matter, 1, 2, it doesn't matter. You just know what you have to do, right? One rule, find a crossover, go backwards, find the highest peak. That would become one piece of its own. That means that that wave is over. So on this one, what do you do? Let me just bring this. You find the crossover. Well, we already did it. You grab it and you put it here. That's the lowest one. See? This is one wave now of its own. Can anybody tell me how many waves in that one wave? Let me see how many of you are paying attention. New traders only. 1 second. How many waves in that wave we have there? Let me see how many of you are paying attention. Subwaves. I'm talking about subwaves. So everybody said 1. 1 is not the question. How many subwaves? 3. Good. Some people say 3, some people say 5. Some people said 4. So let's go see how many subwaves we have. You're going to see how much you were paying attention. We need to know how much subwaves we have in this, right? Right now, we're what? We're in the 2 weeks. So let's go 1 week. And you would see how much you've learned. How much subwaves do you have in there now? I think it's pretty clear, right? Yulia, you're kidding, right? Yulia is having fun with you guys. She's at 7. She's adding up everything you do, right? See? 3. Very easy. Well, 2 if you're counting impulse. Don't forget to count the correction. That's a wave 2. It's not going to be 4. It never will be 4. Anybody want to tell me why it will never be 4? You guys are forgetting the very basic things I've taught you. How many waves in any correction? Forget about impulses. How many waves in any correction? 3 waves, right? Minimum. We're going for minimum 3. 2 impulses and a correction, right? Everything, any structure in the market, you're going to look at. The least it is going to have, if it's one piece and you want to break it up, the least it's going to have is 1, 2, 3, or 1, 2, 3, 4, 5. It never will be 4. Does that make sense? It could be 1, 3, 5. 7, you can break that down to 5 or 3. 9, you can break that down to 5 or 3. What does that mean? It means one of the waves within it. If you're getting 7, 9, or 21 or whatever, it means some wave within that structure is extended. So you break it down and break it down until you have 3 or 5. Most times, if you get 5 and you can reduce that to 3, then it's 3. Right? You don't change it. You go with what the MACD tells you. If you start changing that, you're going to get in a lot of trouble. Stick with what the MACD tells you, because your accuracy will come based on what the MACD is showing you. Remember, you are here because you found that I have been doing this thing accurately, right? I've had this problem with some traders who think, well, I had 5 and I like the 5. Why not leave it at 5? And I'm like, it's not what you like. It's what you're getting based on the rules you're using. Because if you change the rules in the game, then you no longer have the same rules. You have to go back and retest everything based on that rule you're changing it to, right? And I have not done that. You stick with the same rules you have. Does that make sense? You stick with those rules, because that is what will give you your accuracy when you're going to be making the forecast in the future, right? You just have to fix those rules and stick with them. Now, how do we understand patterns and all of that, and how we will label it? Let's go. We're running out of time, so let's go, right? So if you guys are going to have more questions, we'll take them. So now you know that. So let's look into this. One of the questions was, how do we know this is overing? This is about to end. Remember what we said. You follow the same rules. So you go to 1 day. Let's go to daily. And you follow the same rules. Nothing new in the game, right? How many pieces you have here? It looks like too many, right? What do? Filter between daily and weekly. 3 days. Let's go. 3 days, still one piece. Let's go back. 2 days. How many pieces we have now? 3 pieces. See how easy it is? You could count how much you want, but there's 3 pieces in there. Let me show you them. Look how easy and how accurate it will be. An impulse, a correction, and an impulse. Does this look like it have more waves inside? Definitely. That's an extended wave in the making. So that wave is extended. It becomes too easy now, right? And now you understand how I could put 2 lines in the chart and the forecast is so accurate. Behind the 2 lines in the chart is all this work you're learning here now. So you see me put 1 line and I said, sell the breakout and it works. And you're like, how does this guy do it, man? Well, this is it. You have to go through all this stuff. And when you learn all of this, you can put 1 line in the chart and be trading. So we're in an extended wave. So far, we haven't done labeling. We're just telling you how to break them apart. So can we tell how many waves is in this one? Sure. Now that we know where the waves are, let's separate them. This is your impulse. You go backward, the highest. You come back here, you come backward, the lowest. Here is where you're going to get an exception. So let me show you why it's an exception. You get a crossover, you go backwards, this is the lowest. See that? Not this one, this is the lowest. When we do patterns, I want you to remember this. When we do patterns, I will move this line to here. And the reason I'll move the line to there is because this is a contracting flat. This is an exception to the rule. When you have contracting flats and you have running flats, you're going to have an exception to the rule. The reason you'll have an exception is because this C wave never go beyond. It should have gone beyond and this would have been the lowest. But because it didn't go beyond, and we figure out that this is a contracting flat, we will put it here because this is the whole correction. You can put it here for now. For practice sake, while you're practicing, put it here. And when we do patterns next week, not next week, the week after, I will show you where you will figure out what structure you're looking at and how you will put it. So you can put it there. I'll put it here for now just to show you the impulse and the correction, right? So this is your impulse. This is your 3-wave correction. And this is another impulse. So let's go and look within this impulse. We're still interested in this piece here, right? Within this piece, how much is there? So let's go back to the daily. And now you can see we have a wave up. We have a wave down, a wave up, a wave down, and another wave up. And the same question comes. How would you read that structure? Is it 1, 2, 3, 4, 5 wave structure? Right? Is it 5-wave structure, or can we reduce this? Right? Now, let's see if we can filter that out. Well, 1 day, 2 day, we can't filter out. They don't have any other one, right? Exactly. When you come to do pattern, I will show you. You could, for now, you put it like this. You break it up like this. For now, you just need to break them up. And then we will put the pieces together. So let's say you break that into 5. And you want to know, well, is that, and somebody asked me a question once, right? Remember one of you asked me, what if the first and the second has divergence, but the third and the fifth and the first doesn't have divergence? That was a question when we were doing divergence, remember? And I said, when we come to patterns, I will show you that. Why and how we would look at it. When you see that, you're thinking, okay, wait a second. This is a corrective structure in the middle and it's a running flat. 1, 2, 3. So this is the impulse and this is the impulse. And if you're looking for divergence, you would look between this and between this. That is between this one and between this one. You guys are starting to see a few things now, right? It's like your eyes are just opening now. Don't worry, you're just at the start. When we do patterns, you're going to get a little more amazed of it. you can, there's a good reason. James, you said the right thing. While I'm doing it here, you're not the only person. It looks easy. When you go home, you sit back, you relax, you take the chart and you said, okay, let me go find all these patterns. And you're going to see like, what the hell was he doing there? I can't figure out. Let me look at it again, right? You will have to look at it again and again. And then we will do it and you will get practice with it. And then we will do more next week. And then when you still find it, you're getting confused, we're here to help you. Joe, Joe, by the way, so if you don't know, Joe is with me since when? Since I think Scott time, right? The very beginning. You would probably know Sherry and a few more people there, right? Joe was with me since I used to do those very, very early days, those free webinars in the London session, right? That was a long way back. Finally, he has joined the group with us. Yeah, that's not 8. I don't think it's 8. It's about 5 years. Because I'm in Forex for 5 years. So it's about 5 years in the days when we were at Scott there. Right? We're glad. You should remember Victor as well, right? You should know Victor. You should know Sherry. Who else you should know from the group there? I can only remember those 2 from there. Anybody else from Scott group, the early Scott group? You should know those guys. Right? So yes, see how amazing it becomes. It becomes easy. So here's what I'm going to do. I also have to teach you how we're going to read the waves in this. But we've already gone for 50 minutes. And I know this is a little overwhelming for a lot of you. So how we're going to count it in terms of what is ABC, what is 1, 2, 3. I will skip this here. I'll not go further because I want you guys to digest this piece and digest the divergence and digest everything. So I want you to spend this weekend breaking up everything. What we're going to do before you start, you're going to start practice on Monday. But your practice, you're going to see what I'm going to do for this weekend. I want everybody who is not in the room but will have the thing. This weekend, I'm going to create groups, small groups for your practice session. Right? Now, you don't have to label in the practice session. Because the last time we tried to do that was confusing to a lot of people. You would have to go in the practice session and you will have to show that you can put the trends correct, you can put the fibs correct, and you can break up the MACD correct. Right? It's only 1 week of practice and all of you will have 2, 3 sessions to practice. So you will choose a chart in your practice. This is what we will do this weekend. Not today, tomorrow. So I want you to watch out on your Skype and keep the Slack open. I will get together with my guys who are doing the training. We will set the timetable and we'll post all those time slots on. There are going to be a lot of time slots because I think we have about 7 or 8 people who are going to be doing, about 10 or 12 people who are going to be helping you with the training. Right? So you will choose a time slot that fits your time, right? That you know for that whole week you're going to have free. And for the whole session, not only the week, you'll be in the same time slot all through the course. That you're going to be free that 2 hours and you're going to be there to practice, right? So you will choose it and then you will send me, I want you to listen clearly, not on Slack, not anywhere. You will send me a Skype message of the time you've chosen. And I will immediately use that message to add you to a Skype group. We're not going to train you on Skype. I need to create smaller groups on Skype. You will be in a small Skype group with 10 to 15 people. And then the person who's going to train you will give you the link for the training sessions in that Skype group. That link will lead you to a Zoom meeting like this where you will do your practice. When you get in the practice group, what he's going to do is he's going to select people who are going to start to share their charts and practice. So he's going to already ask in the Skype group, I need 2 or 3 volunteers for Monday, which means 2 or 3 people who are going to take a chart, take off everything from it and start showing how I do it. Put the trends, put the fibs, break up the MACD. Put those lines and break up the MACD and show them how much waves in there. You don't have to identify patterns. You don't have to identify labeling. We will do that the week after because it might be overwhelming and confusing. But you have to do that. You will make mistakes. He will correct you and you'll move on. That's the basic stuff. Everybody will have a chance. It's 1 week, so 2 person every day. If you're 15 of you, you'll continue 2 or 3 some days and you're going to finish. You need a mic. Yes, you definitely need a mic and you need good internet connection for that. Because you will be presenting, you will be doing what I'm doing. You will be the person presenting to the rest of the small group. Everybody in that group is at the same level of you. Don't be shy, don't be, there's a reason we create small groups. Because people get a little shy when they're in big groups and they're, all of that. In small groups, it's a little more cozy. You like those guys, you get to know them. They come back into the big group and they create little subgroups, but we don't encourage that. We rather you come and you mix with everybody and, get to learn more. Exactly, right? So you will choose your time. What is more important there is that you're going to be there that time. All the guys are going to use the same rules to help you. They're just your guide, right? They're not responsible for the course. I am the one. So if you have any problem and if there's anything in there that, you know, they might not know, remember, they're not the person training you, right? So there may be, you pick a chart and there's something in that chart that they can't recognize. They will call me and I'll come in and we'll solve it, right? So there is no issue there. If you think, you know, you're not too sure about something, you can let me know and we'll settle it, right? We'll solve it, because these guys are just helping you. Let's be grateful for that they will find the time to be there to help you, right? That's the main thing, because it's not easy for somebody to find 2-3 hours every day to be there to, you know, to guide you guys. And we specifically keep these groups small so that we can give you maximum training, right? Don't worry about that, James. We don't have a problem with that. I think the guys will take their time. They will help you, and you will have all the time you need to do it. So don't worry. There's no need for you to rush, right? Don't worry about that. So actually, I'm very happy that you're still, you know, you can. I actually admire your courage. You know, most people when they get into downside and anything, they kind of like give up. I like people who don't, right? So great that you're here. So let's go. Look out this weekend, Saturday, for that Skype and for the Slack. I will post in the about group the groups. In the about in Slack, I will post the groups. It's not the about group anymore. Let me just, where you see link and messages, you check there, because I'll post all the time frames in there. There will be a message there for you, and then you will choose the one you want, and you'll go. You can change. Don't worry. You can change it if you need to. The first 2-3 days, if you're not comfortable with the time frame, you thought this time frame was good for you. You know, it's not a test or anything. You can change it. So just make sure you choose one that you're free. If for any reason you think that time it doesn't suit you, you choose a better time. It's okay, right? So look for that. The rest of it next week. Nothing. You wouldn't be missing anything. I'm just going slow with you guys so that you get everything, right? Next week, we're gonna do back the MACD. I want you to get that MACD thing good. I'm gonna do back, and I'll show you how to label it. I'll start with that class, and then we'll go through and we'll look at all the patterns. We'll identify all the patterns for you. What you can also do this week, and you should be doing already, is practicing those patterns. Know their names and know the internal structures of them, right? Make sure you know that. If you think you're getting difficulty with it, ping me so we can look at it. But that's not difficult. It's in the book. You just got to read them, draw them, write them down, and that's it. Can you finish this last wave too, please? This last wave, which means this one here. Oh, you guys want to know when it's going to turn? Or break it up. The breakup is easy. We're looking at this. You will get one, and you will get this. This one will have 3 waves inside. This will be an internal structure with 3 waves inside. Right? Everybody get that? Clear? Great. So let's make an assumption you want to know how many waves, and let's pick one of these and go lower. Let's say you want to know how many waves is in this one. Right? Let's take this one, for example. Let me go break this one up. So it doesn't matter. Anyone is the same principle, right? So let's take this one here. And you want to know how many waves is in this one. All you got to do is go 1 time frame lower, go 4 hour. We go to the 4 hours. How many waves is in that? You may need to correct them when you come here, because remember, our daily candle has many hours inside. So when you go, you might not find the exact top. You just put it to the exact top. And I think this is pretty easy. Everybody can see how much we have there. So you can see 1 here, up there. You can see a correction here. You can see 1 there. And you see there's a small correction here for 1 there. So your question will come immediately. Here's your question immediately. Is this equal to this? Or is this an internal within this move? Right? Immediately, that's a question, right? How would you know that? Anybody want to guess what we're going to do now? You up it, and you see the magic how it works? You have 1, you have 2, and you have 3. See how easy it is? And you can see that this one is a much bigger wave than this one. Practice, practice, practice. You guys go practice this. I want you to go practice and figure out how much waves were in where. And so remember I told you about those 5-wave structures, most of them fix it. Well, we're not going to fix it. No, let me go back to that TradingView. You don't have to pay for it. I would not encourage you to go subscribe to TradingView now. First, because we are going to expect to have our own platform, not our platform. One of our traders is creating a platform very soon. In a month or two, it should be out. So you don't need to buy a year subscription there. And the second thing is you really don't need it. You will have a MACD that you can use. If you use the free version or you use any other charts, I think the guys have a MACD they can give you. That will break the charts up for you, right? You can take the 30 days trial if you want. Yep, the course will finish by then. And then we'll get our own one to use. So I wouldn't advise you to go subscribe there now. I have the 2-year subscription. That's why I'm keeping it. But as soon as we get our own, I'll be moving away from that. That place has a lot of, the guys are good, the charts are good, but the place itself is infected with too many trolls and too many spammers. And that's a problem. That's why I'm out of there, because they throw me out for telling people that what they're doing is wrong. Right? I'm like that. I'll just say it. If I think what they're doing is wrong, I'll just say it. You can throw me out if you want. I don't really mind. I stopped a conversation with a guy this morning because he was he wants me to sell you guys to his spamming thing that he's doing, right? He's actually, he has this, I think some of you may have heard of it, the 5%ers. There's a group of them. What they say is, we're taking any traders in. You just give us, let me stop the recording. I don't think, we can record this for those guys so they'll hear it. You give us $400, we'll give you a $10,000 live account and you will trade it. So I asked him 2 questions. 1, who are the brokers? He told me, he named 3 brokers. I said, do we get access to the brokers? Do we see the brokers directly? No, it goes through there. They have a platform and then all the trading goes through their platform to the broker. I said, well, that doesn't make a lot of sense. In the first place, that looks like a scam. You're trying to scam traders. I said, okay, what's the limit? What's the drawdown before you close the account? 4%. Well, guess how much is 4% of 10,000? The $400 you give them. So when you blow your $400 out, they tell you goodbye. They have 0 risk, right? So I said, what are you risking? If you're actually making this thing look like an amazing thing, give us $400, we'll give you a $10,000 account to trade with. Where is the amazing thing? You're not risking anything. You're not saying, okay, we give you 20% or 10% drawdown. You're saying you blow your $400 and you're out of here. So where does that $400 goes to? Well, it goes to them. It's a 0 risk thing for them. Here's how the thing goes. I can open a demo account, or I can make an agreement with any broker and say, here, I'm going to bring 1,000 people onto your platform. We'll open trades, we'll open accounts for them, let it look like real accounts, but we're not going to send those accounts anywhere. We'll keep it all, and then we'll split the money. Let them lose their $400, and then we'll split it. We give you 1, we take 3. Right? Sounds like a good deal. Any broker will agree to that. It will look like a live account because you will have it as live, but you're not trading with anybody. You're just making trades, basically, and you will eventually blow up if you were getting 4% drawdown, you will eventually blow out your $400. They can as well give you $100,000 if they want and tell you, when you lose $400, that's it. It doesn't matter how much they give you, you're still going to lose it. I would have lost it. If you know how I trade, I take 2 trades and $400 drawdown immediately. So I would have lost the money, basically. I can tell you that I would get more than 4% drawdown. So I told him that sounds like a scam. And he said, well, I'm being too, how you said, you're being too aggressive or I don't get the exact word. He said it would be difficult for us to work. And I said, thank you. I know it will be. Have a nice day. I'll see you later. That's the end of the conversation because I'm not going to be selling that scam. But guess what? What would have been the other proposition for me is that they'll probably give me $100 for every one of you who signed up. I don't need it. Because he was telling me he's talking to everybody who trained and a few people are already, he has about 4 people who've already, those people are selling out their own traders. If you know that thing is a scam, why would you propose that to your traders? I mean, seriously. And he called one of the big names, some Rybakov from Canada. I was like, why would that guy even associate his name with you guys? Why would he need the $100 from the traders? Sounds like a real good scam. Why these people do things like that, I have no idea. So I'm like that. I'll tell you plain as it is. I don't care about any money thing that I will make or don't make or what I'll lose. It doesn't matter to me. Life is too important. There are much more things that are important than that. You guys go train. Have a wonderful weekend. I will see all of you. Don't forget, Sunday we have the free webinar. You can help save some souls. You can help save some souls from not going to those guys, because I would probably raise that on Saturday, Sunday. I'll be talking about that so that no trader get trapped into that thing. Now that they remind me of themselves, I'll talk about them. I wouldn't call their name, but I'll talk about a situation like that. So a lot of people who are going to them expecting to make money will realize that no, you don't need to fall trapped to a scam like that. I actually forget about their scam that they exist. Very funny people. Tomorrow I'll be sending out the Skype, and I'll be post. Why I need to do it tomorrow? Today is too late for me. I wouldn't have time. So when I post early in the morning, all of you will come in. It will take hours and hours before all of you come in. I want to spend the whole day to get all of you in and form those groups and get you in the group. And I want everybody to be in tomorrow. Right? So Monday you can start. So don't worry, any questions, anything you have, we're here for that. The whole group is here to help you. This group has the most amazing people. That is you guys. All right? And we look out for each other here. That's the whole point. So everybody stay. Saturday I'll see you. Sunday I'll see you. And Monday I'll see you again. So I'm not going anywhere, right? I'm here for the whole weekend. I'm gonna have some friends over Saturday. So when you send me the Skype message, don't expect immediately I'll add you to the group. I'll find time to do it, right? Because I have some friends coming over for dinner here on Saturday. So a period of time I'll be a little busy, but all the rest of the time I'll be here for you guys. Yep, they are very small, don't worry. They're all gonna be about 10 to 15 people. Some of them will be smaller than that. So, okay, guys, everybody take care. Trade with care. If you're trading today, trade with care. The market is moving a little, not much. Most of the movement right now are corrections. Just trade with care. Next week, we're going to get some good trades again. Take care, everybody. Bye-bye.